and we're doing much the same thing by creating all this money. We're diluting the supply of money. That leads to inflation. It leads to devaluation of the dollar, and eventually it's going to lead to default.
Thanks for watching this RTD interview. Don't forget to pick up your RTD Scary George round. Now enjoy this interview. All right, welcome to this RTD interview. Excited to have first-time guest, Mr. Mickey Fulp, the creator of the Mercenary Geologist.com. He's an analyst as well as a mining expert, and so I'm happy to have Mickey join us. So, Mickey Fulp, welcome to RTD Interviews.
Hey, thanks. My pleasure.
Well, I appreciate you joining me for an interview, and so I'm excited to have you on because I'm curious to get your thoughts on all the things happening now. You know, we can talk a little bit about other problems, but then I'm also curious to get your idea on solutions moving forward, given the fact that you're a geologist and you understand the, things beyond the precious metals. So I'm looking forward to getting your thoughts on that. But before we dive any further, can you give the audience a little bit of your background and how you've arrived at this point in your career?
Yeah, so I spent 30 years as a practicing field economic geologist looking for metals and oil and gas and water and sand and gravel and just about everything. I've worked in 31 countries. About 12 years ago, I decided I wanted to change up a bit, so I put the word on the street. I wanted to be an exploration mining analyst, and a couple of months later, I landed my first job. Within a year, I was on my own and writing a newsletter, mercenarygeologist.com. I evaluate exploration mining projects all over the world. I write a financial newsletter, libertarian, Austrian economist, kind of fits into the whole shebang of what a bunch of people in our business do, and I've gone up from there. So
sounds good.
I operated a small farm in northern or central New Mexico. I raise beef cattle and rabbits. I have a second residence in Vancouver, BC, where all the money comes through.
So I appreciate you for sharing that. So I'm curious to get your thoughts on where we're currently at now, given this current health scare that the world's facing. So the response to that, I'd imagine, is something that you would have never imagined seeing in your, financial investing lifetime. Can you assess where we're at now and what you see coming, and then we'll get into some of the solutions and things of that nature?
Well, like any good scientist or engineer, when you have problems, I always look for solutions. I wrote a piece about a month and a half ago called "When the Cure Becomes Worse Than the Disease." So, the world's economy is getting destroyed. U.S. economy, which is really my concern, is being destroyed. With all this money creation out of thin air, with the stroke of a keyboard, we keep creating more and more money, more and more fiat currency, and the piper will have to be paid at some point. And I'm a big proponent of owning physical gold in your physical possession. So that's a lot of my solution, is to have a significant amount of money, of your net wealth, in physical gold.
Interesting. Now, one of the biggest things I hear about is the possible breakdown of the supply chain. And you mentioned that you have, a farming of yourself to supply yourself with some meat down the line. So,
Yes,
so what are you seeing in as far as that sector, as far as food itself? We're hearing about, shelves running empty, things of that nature. Are those some things that you're keeping an eye on as well?
Well, certainly supply chains have been broken. First one to break was bog roll, toilet paper, which made a lot of sense to me. But the animal food chain supply is broken right now. And it's basically, I think, because we have concentrated over the last 20 years or so into all these giant meat processing plants with Tyson and Smithfield, and as soon as some of those shut down and we start seeing people hoarding ordering meat at the grocery store. My solution, of course, is to raise my own farm animals, and I live in a part of central New Mexico where we operate somewhat on a border economy. So I raise rabbits and beef, and I have neighbors that raise chickens and have eggs and grow pigs. So, and have gardens. I don't have a garden, but I have fruit trees. So I protect myself through a local community of growers. And most people don't have that advantage. The great majority of Americans now live in the suburbs and cities, and they're dependent on Walmart or Smith's or Albertsons or whatever your local supermarket, Kroger, or whatever. And that's where supply chains get broken.
Yeah, I'm one of those people that's in a metropolitan area. So I wish I had the opportunity to begin growing and things of that nature at a larger scale. But one step at a time for me, and starting with a garden. So,
well, I'm sure there's community gardens in Detroit. A lot more cities now have. I'm from Missouri originally, and in St. Louis now, for example, there's lots of community gardens where people, they take land as vacant and they grow, put in work and get a portion of the proceeds for that. So that's part of the answer too.
Yeah. So yeah, definitely. As more stuff I have to investigate and begin checking out for myself as well. So I'm curious to get your thoughts on the financial response. And so I imagine what we're just witnessing the beginning of what the Federal Reserve, as well as what the Treasury might put out there as a beginning of all this. So do you see the ramping up of more monetary fiscal stimulus, and will this buy them time before some people say the complete meltdown or whatnot? Or what are your thoughts on that?
Well, I think that remains to be seen. I'm certainly concerned with all this creation, both from the Fed and Congress. I mean, they're basically creating dollars. They're diluting. An analogy a friend of mine made yesterday to me with in the stock market, and we operate in junior exploration venue, basically out of Toronto and Vancouver in Canada. And what these companies do, they have to issue equity financing. So they're always diluting. They're diluting their share structure. They're diluting their shareholder base. And we're doing much the same thing by creating all this money. We're diluting the supply of money. That leads to inflation. It leads to devaluation of the dollar, and eventually it's going to lead to default. Mike, the U.S. has already defaulted twice in its history on the dollar. First time was in 1933 when Roosevelt devalued the dollar by increasing the price of gold from $20.67 to $35. The second time, which was in my lifetime, was in 1971 when Nixon took the U.S. off the gold standard and the price of gold went up. Well, really what that meant was the price of the dollar went down. Now, the one thing that we have in our advantage, the world's reserve currency is still a dollar, and do not think it is not. I'm not going to tell you that it's going to be for my lifetime or your lifetime the world's reserve currency, but it is so far. And the thing that we have going for us as the world's reserve currency is everybody else is diluting their dollars or their fiat currency the same way, or even more so than we are. I mean, look at Japan. They've been in stagflation for since 1991, so that's almost 3 decades now. And so, what do you replace the dollar with? Well, not euros. That's the euro. That's a fiat currency without a country. How's that supposed to work? Chinese yuan, no. British pound, well, that was the world's reserve currency for a significant number of years. But, the solution eventually, I think, will be a basket of currency and metals that will be the world's reserve standard. Personally, I don't think that's going to happen in my lifetime.
Right. Understandable. Now, I'm curious to get your thoughts. So a lot of the viewer, because on this channel here, Rethinking the Dollar, we talk a lot about gold and silver and the importance of having it now. now more than ever, but yet from a not supply standpoint, but the ability of people to actually purchase them from their local coin shops as well as your online stores is becoming problematic because of the sourcing aspect of it. So what are you seeing and what are you hearing about the supply side of things? Will the online dealers continue to still be able to get inventory in to meet the need of citizens throughout this?
And so this segues from your previous question about broken supply chains, especially animal protein in the U.S. And we saw that broken supply chain come in March. Mid-March to the early part of April, you couldn't go to your coin shop. And well, you could, but the markets were extraordinary. And unless you went to the right people, luckily I'm connected to some of those right people, the delivery times are outrageous. So that came about because gold mines shut down, and to some extent, so the supply was somewhat constrained, but really it happened because airlines shut down. So you couldn't get the gold from the refiners to the retailers, or you could not get the gold from the mines to the refiners, and a significant number of refiners shut down for a while. Canadian Mint shut down for a while. U.S. Mint quit minting coins for a while. The three big mints in northern Italy, which are the bars that we all know and buy, PAMP, for instance, they shut down for a period of time because that's where the virus really hit hard in northern Italy. So we saw that broken supply chain happen, but it only happens for small denomination coins, the tenth of an ounce to the 10-ounce coins. The big guys with the 400 ounce bars or the 1,000 ounce bars or 100 kilo bars, there was plenty of those, and that's what central banks trade a lot. So that trade was not affected, but the small retail trade certainly was.
Thanks for watching this interview. If you're enjoying content like this, feel free to become a part of the RTD community by becoming a member via Patreon. All it takes is a monthly contribution of about $5 a month for more great content such as this. Just scroll down beneath this video here and click the Patreon link, and then hit this tab right here to become a member of the team. Looking forward to bringing you more great content. Now, let's get back to this interview. Thanks. Interesting. Now, with that being the case, along with all that activity you just listed, the price of gold has went up as well as silver most recently, and so the ratio right now 100 plus to 1, and so I'm assuming that
crazy.
We're going to see. Will that continue to spread, or will that, in your opinion, the short term, long term, minimize itself a little bit and become more realistic in terms of what the ground has?
Yeah. So. These ratios, the gold-silver ratio above 100 is nearly unprecedented. So from early March till yesterday, the ratio was above 100. There's only been one other time in the history of gold and silver in the United States where that was over 100, and it was in 1938, 1939, near the end of the Depression, and all the stuff was starting to happen with Hitler invading countries in Eastern Europe, that the ratio temporarily went above 100, and it really happened because the price of gold went up. You couldn't control the price of gold, and the price of silver went down because we were still in the middle of the Depression.
Mm-hmm.
But we reached at some point in mid to late March, we had a gold silver ratio of 120. And that is absolutely unprecedented. Never happened before. Yesterday, for the first time in 6 or 7 weeks, we went below 100. I'm going to check right now and see what it is. It's about gold gold's 1746 right now, and silver's 1748. So it's just a tad under 100. The normal range is somewhere 40 to 70, maybe. Since 1971, that ratio, the mean and the median have both been one's 55, one's 56 or 57. So that's kind of the normal. So at this point, silver's got a lot of catching up to, but I expect it to catch up somewhat. This is certainly a big buying opportunity for silver right now, with the idea you buy silver, then when that ratio starts to normalize, you trade your silver in for gold, which is real money. Silver is no longer a monetary metal to any extent. But it can act like a monetary precious metal in times of financial duress. It really is an industrial metal at this point.
Right, of which I would agree, and I believe that we're currently experiencing those type of events now as the world races to the bottom with the debasement of currencies. And so I want to dive a little bit towards the central bank response of negative interest rates, assuming that that's in the cards when you say, and then that further makes gold and silver of value. Would you agree with that one?
Oh, absolutely. I mean, negative interest rates make no sense at all. I mean, you're gonna pay some central bank to hold your money with no return. It makes, I mean, I don't get it. And luckily, so far, we don't have negative interest rates. Well, we have negative real interest rates, but we don't. If you put your money in a bank here, you're not going to get interest in it, but they're not really going to charge you to hold your money. Or if you buy a treasury, it's not going to be worth less face value than when you bought it. And that's really what's happening in Europe right now. It's unsustainable. Absolutely cannot go on for very long before the whole world's financial system is going to collapse. You can't keep creating debt and more debt and more debt. Who's going to buy that debt? Who wants that? Right. No one. Right. I mean, that's evil. I was taught by my mother very early on that debt is evil. I've been in debt really once in my life when I bought my farm on a 30-year note, and I paid it off in 13 and a half years because I like debt.
Yeah, I'm not a fan of debt either as well. I try to minimize my exposure to it as much as I can. But it's one thing when our national currency in of itself is debt-based in nature. So I guess you have to keep those things moving in order to reap the benefits of it. But I'm curious to get your thoughts as a geologist. We had the oil situation last month with the futures side of things. And so I'd imagine, did you ever think you would see a day where the price of oil on the futures market would go, I think, -40 or something like that? And is that just the beginning, or is there more to come in your personal opinion?
No. Well, I think we're at risk after it happened in the front month contract that closes the third Tuesday or Wednesday of every month. That front month contract closes, and what happened was there was a storage problem. So there were a bunch of people with WTI contracts that were ending, and they either had to find storage for that oil or sell that contract. There was no storage and no one wanted the contract. So they had to pay people to take those future contracts. We were concerned that was going to happen for the May contract, which either closed yesterday or closes today, and right now the price of oil is about $33, so it's not going to happen. And part of that is the storage problems eased. U.S. inventories actually went down 700,000 barrels last week after increasing about 25-30 million barrels over the last previous 6 weeks. So Cushing, Oklahoma, where a lot of WTI was stored, was up against the wall with storage. There was storage, but it was leased out. Part of the solution was that, love him or hate him, Trump's done some good things. And one of the good things he did last month is he opened up the Strategic Petroleum Reserve, which had space for 75 million barrels of oil. Now, if you look at 75 million barrels of oil, it sounds like a lot, but given normal U.S. demand, now demand's down right now, that's only about 4.5 days oil supply for U.S. So it could happen again. We hope not, because when things like this happen, it upsets the entire financial paradigm. I mean, the world run on oil, whether you want to admit it or not. We live in a world of oil. It's our most important commodity. The only other things that would be as important would be iron ore and cement. But the world really runs on oil, and we certainly hope that does not occur again. It's not going to occur this month, but and the real solution to it was the cure for high prices is high prices, and vice versa. Cure for low prices is low price. We had an oversupply. The Saudis cut back, the Russians cut back. Because of economics, U.S. production is going way down because it's not profitable. So when that oversupply, we've been oversupply for quite some time, is starting to ease, and hopefully we'll get back to an oil market.
Interesting. Now, as we draw towards the end of our discussion, I'm curious to get your thoughts. As I mentioned earlier, a lot of the viewers here at RTD, mentioned about, Mike, what about platinum and palladium and uranium? And, are there any other metals out there that you would recommend or suggest? So other than gold and silver, stick to what I know best. And so as a geologist, can you share with us some other opportunities out there that people might be able to dip and dabble in and educate themselves on from a geologist standpoint? What's some other alternatives or solutions that you might throw out there?
Yeah, so the metals that interest me right now from exploration, development, mining side are number one, gold. I am very bullish on copper, not for the short term, because we're going to go through some perturbations on copper demand until the world comes out this one way or other. But look at the metrics. There's 85 million more people on the planet every year, and 25% of people in the world go to bed dark and get up at dawn because they don't have electricity. And most of that's in Eastern Asia and sub-Saharan Africa. Eastern Asia is electrifying very quickly. So from that point of view, very bullish on long-term fundamentals of copper. You can't transform electricity without copper. The other metal that really attracts my attention right now is uranium. As the world moves to presumably a less carbon footprint, nuclear energy is the only baseload source of electricity that does not have a carbon impact. So based on that, and based on some recent moves by the U.S. government to stockpile uranium, uranium is going to have its day. It's been a 9-year bear market since the Fukushima incident in March of 2011. So price of uranium is about $34 spot right now. We need about a $45 spot before U.S. producers come back, roaring back, and they will come roaring back. So I'm looking at copper companies, I'm looking at uranium companies, looking at specific gold companies to speculate in, and I am looking solely in the Americas. Number one venue would be the U.S., like parts of Mexico, Chile, Peru, parts of Canada. So I'm very unwilling to take geopolitical risk now, and so I tend to pull my horns in a bit and focus on the Americas. I like certainly like parts of Latin America, speak Spanish, so I feel very much at home, and some of the best deposits in the world are especially copper deposits and gold deposits are in Latin America.
Interesting. Well, Mickey Fulp, it's been great having you here on RTD Interviews. For those that may want to follow more of your work, find out about your newsletter, can you direct them back to where you do your business at?
Yeah, so mercenarygeologist.com. I run a sponsorship model so I write a free newsletter. Email subscribers, all you have to do is sign up, give us a name, an email address. You can pick your name. We don't care. Give us a working email address. But the advantage is you get my stock picks immediately on that. So price is right. It's free. And we're very active on Twitter, Monica, at Mercenary Geo. We have over 51,000 followers, and we cover a lot of stuff that interests me, including things we talked about today: libertarianism, macroeconomics. Huge sports fan, grew up in Missouri, so the Cardinals and Blues are my team. And the worst thing about what's going on right now, Mike, is I can't turn on the tube and watch a hockey game. You know, a year ago I was in my glory. The St. Louis Blues eventually Stanley Cup champions, and you know, the history of the Cardinals. So let's hope we get back to some normality and we get sports and we can go to stadiums and cheer and yell for our favorite baseball, football, hockey, NBA teams, etc.
Yeah, that would be nice. I'm a bit more of a basketball person myself, and so it's been a little bit different on my end as well. So, but once again, Mickey, I appreciate you for joining us here on RTD Interviews. Looking forward to continue to follow your work and definitely connect with you again down the line and see where we're at that point and see what might have developed in between now and then. But once again, thanks for joining us on RTD Interviews.
Hey, thanks for inviting me, Mike. It's been my pleasure.